Hey, what's up guys, John here. Millions of Americans are searching on Google, need job, they need a job, they need to find a way to make more money.
For many, their wages are not keeping up with the rising costs of everyday necessities.
A record number of people in the U.S. have more than one job. That's according to the Labor Department.
In fact, it's blowing through the charts. This is going back all the way to 2004, 20 years, right? Look at this chart, dating back 20 years. We're about to make all-time highs in January. Why? Well, consumers are getting ready to pick up a lot more debt, holiday gifts and travel and expenses. And thanks to student loans in October, 43 million Americans are being pushed into a harder financial position.
The Supreme Court decision means borrowers must resume paying off their entire student loans starting October 1st.
Some say they can't afford to pay, and others say they won't.
They're looking for ways to make more money, but at the same time, bosses, employers, they're looking for ways to cut costs. It's a really big problem in the labor market. And in 2020 and 2021, there was this great resignation where employees nationwide were telling their boss, hey, look, inflation's out of control, the cost of living is out of control. I need a 20 or 30 or 40% pay bump or I'm going to leave.
2021 has been the year of the Great Resignation. Millions of Americans are leaving their jobs, over 4 million every month at the moment.
And many bosses were forced to pay it. But now everything is flipped on its head. And with it, we're going to see tens of millions of Americans being laid off of their jobs in 2024.
Major tech companies have announced another round of job cuts. Google, Amazon, and Snap are among the companies continuing to downsize.
And I'm going to show you exactly what's going to happen. I believe we're walking into the greatest wealth transfer and the greatest transfer of assets that we've ever seen before over the next 24 months. I'm going to break it down and give you the facts. Please hit the like button. Hit the like button. YouTube will share this content, educate more people about what's really going on in the U.S. economy. And if you'd like to fix your credit to position yourself for this massive wealth transfer, we'd love to help you at my company, GreatCreditFast.com. That's GreatCreditFast.com. If you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report, go to GreatCreditFast.com. Click the link in the description just below this video. Schedule a free strategy session. Take a look at this. So even looking at 2009, the GFC, right, the Great Financial Crisis, this pales in comparison to where we are right now, right? All the way back 2004, where we are right now. Now look at what's happening. This came out this morning. Workers across all industries are anxious amid tumultuous job environment. Mentions of the word anxiety on Glassdoor surged 338% in 2023. Workers across, and the reason for this though, is because even if you're working a full-time job, 40 hours, 50 hours a week, you're working very, very hard. The dollar doesn't go as far as it used to. And so people are stressed out beyond belief, working even great jobs, right? So people are stressed. And with this, anxiety is picking up. And at the same time, you know, technology is about to change everything. Like ChatGPT, generative AI, all of these things are happening, and they're happening very, very quickly. And it's putting a lot of pressure on millions of Americans. Workers across all industries are egregiously anxious this year, thanks in large part to concerns surrounding layoffs, return to office policies, and the acceleration of artificial intelligence, according to a job review site, Glassdoor. In fact, Glassdoor reported that mentions the word anxiety surge 338% in 2023. It's gotten so much attention that it's been named Glassdoor's Word of the Year. Anxious American workers word mention layoffs, right? Layoffs up 293%. RTO, 476%. ChatGPT, 2,639%. And burnout up 12%. Mentions the word layoff increased 293% over the year, and the term RTO, which stands for return to office, jumped 476%. Mentions of ChatGPT rose 2,639% and burnout 12%. Now, the lead economist for Glassdoor's economic research team told Fox that the term anxious captures a broad set of trends that workers faced in 2023 and will likely continue to face in the new year. Now, look at what's going on with layoffs in just the tech sector. In 2022, 164,969 layoffs in the tech sector. Well, in 2023, we're at 258,000. So we'll probably end somewhere around 270,000, 268,000, somewhere in that range. So going from 164 to you're picking up 100,000 extra layoffs in the course of 2023. You can imagine what's going to happen in 2024. It's going to continue to pick up more and more and more, right? So right here, a severe recession may be coming in 2024 as the stock market, job market flash warning signs strategist warns. Came out 2 days ago. The U.S. could see a severe recession in early 2024. The U.S. could fall into severe recession in early 2024, right? Look at this. Look at this situation. All of this is all coming out, though, in the matter of the last 72 hours. The 72 hours, the job market has flipped almost overnight. Cracks in this strong labor market are starting to show. Why it matters. By most measures, the labor market looks great, but under the hood, there's signs of a slowdown, and white-collar workers are feeling it. The unemployment rate is still at a low of 3.7%. Now look, this number, granted, this number takes into consideration the 453,000 Americans that quit their jobs temporarily, went on strike, and they rejoined the workforce as all new employees entering the workforce. People that are working 2 and 3 jobs, they're factoring this in as 2 or 3 individuals working 1 job. Right? All of these numbers need to be looked at closely. So they say 3.7%. I personally believe it's much higher than that. And hiring appears to be chugging along at robust levels, at least according to top line numbers released by the Friday of the Labor Department. Though we've seen headlines about layoffs in places like Hasbro, EY, and Spotify. And data shows cuts are a historic low, but demand for workers, particularly in professional classes, has cooled. Job openings have come down, and hiring rates have slowed considerably since opening in October of 2021. Now, look at this. When you just type in layoffs and you look at what's happened over the last 72 hours, you can see very, very clearly what's really going on, the big changes that are coming to this economy. Now, I'm not saying this to concern anyone, but I'm saying this to bring clear scope as to what's really happening in the economy. If you're an employee, you're working a job, unfortunately, if you worked a job in the 1980s, 1990s, there was real stability. There was something really, long lasting. There was longevity in many of these jobs. Today, it's not the same thing in most cases. Most cases, jobs today are less stable than even probably working for yourself, right? You're probably, in many cases, probably better off working for yourself or working with someone to build something with that person, because the world's going to change a lot and the cost of living is going to continue to rise. And if your earnings are not increasing with the cost of living, then it's going to erode at your quality of living, right? Look at this. 1 hour ago, Cruise slashes 24% of the workforce. GM Cruise is 24%. Massive hit, troubled robo-taxi developer, Cruise, right? The last couple hours. Forget quiet quitting. Employers are doing quiet layoffs now, 12 hours ago. The Vibe session, driving holiday mass layoffs 4 hours ago. 1 day ago, bosses are using tougher performance reviews to cut workforce without layoffs because employees aren't quitting. 1 day ago. 2 days ago, new round of layoffs at Hasbro impacts Wizards the Coast, reads CEO memo to staff, right? Look at this. Bay Area tech layoffs. 3 companies plan hundreds of job cuts. Tech companies slash jobs. Google CEO slashes company could have handled layoffs better. Bank layoffs. I mean, you have Navy Federal. You have Citi laying off 24,000. You have Bank of America just laid off 7,500. You had Wells Fargo lay off 11,300 jobs. You're getting ready to lay off even more jobs. TD Bank just laid off 3,000. I mean, you're looking at all of these Kaisers now issuing more layoffs. 10 companies. I mean, but when you look at the dates are what's important here. 21 hours ago, 21 hours ago, 2 days ago, 21 hours ago. I mean, all of this is just within the last couple days. If you put, just in the last few days, 15 hours ago, all of these big four of the door, all of these jobs are going to be cutting off and laying off a lot of people. Etsy. Now, I say this because I believe there will be so many smart people that are going to be looking for other opportunities. There's going to be a lot of really smart and talented people looking for new ways to make money. And I think one of the great opportunities right now, if you're an entrepreneur, you're a business owner, if you're, going on LinkedIn and you're looking for, talent, there's going to be a lot of talent that would probably consider picking up some part-time work or possibly going in on some type of venture or maybe taking equity in something that you're building or trying to find a way in which they can work with you if you have a great offer and, it's a good fit, a good relationship. I think we're going to see a lot of people looking for more stability and creating something that they have equity in over the next year or so. I think we're going to walk into a scenario with this $2 trillion in corporate debt that's unrolling in 2024. It's going to issue more and more and more layoffs. And with this situation, with this scenario of all of these layoffs, you're going to start to see a different type of consumer. They're going to be spending a lot less money because they're going to be making a lot less money, and they're going to be forced to sell off assets. That's what they're going to be doing. And why is that? Well, many people bought things that they really couldn't afford in 2021 and 2022. Luxury cars, they were buying second homes, Airbnbs. Many people were even buying NFTs and crypto projects without knowing really much about them, investing in stocks. They were doing everything because they thought the money was never going to end. And now you're going from a situation with very, very, very low interest rates to sky-high interest rates where real wages are softening, but yet the cost of inflation, the cost of living is continuing to rise. They're pushing people off cliff's edge financially, and people are going to start to make big, big changes at their workforce, with their spending habits, and how they spend their time. What do you think about this situation? Drop below. Let's have a conversation. I think we're walking into a massive change in our workforce throughout America. And I think we're going to see a lot of technological revelation coming in the next year, 2 years. It's really going to fuel the layoffs as well. Drop below. Let's have a conversation. If you'd like to fix your credit to position yourself for this massive wealth transfer, maybe you're looking to get business funding. Maybe you're looking to buy a property. Maybe you're looking to invest in real estate, or you're looking to get a loan of some sort. Maybe buy a work truck. Go to GreatCreditFast.com if you have any credit issues. We'd love to give you a free strategy session if you have late payments, medical bills, charge-offs, foreclosures, bankruptcies, repossessions, any negative item on your credit report. Go to GreatCreditFast.com, book a free strategy session below at GreatCreditFast. We just hired 2 new employees that used to work at Equifax, so they were doing disputes directly. So if you have any issues, I'd love to go over your credit report with you, give you some advice, and if there's a way in which we can help you, we'd love to help you. GreatCreditFast.com, click the link below in the description. I'll catch you in the next video.